again, Solis Wealth family. Greg Solis here with the update. Family-wise, October was a busy month for sure. As I mentioned before, Emily turned 21 years old, went away to Cabo with her sister Nicole. They had a blast, had her friends there. Fortunately, everybody was safe. They came back and they said it was truly one of the greatest celebrations they had had. So that was cool to hear. Hard to believe all three of my children are now 21 and up, so they're all of drinking age. So I guess that's one good thing that one thing I don't have to worry about, I guess. So that's good news. Of course, Monica and I enjoyed celebrating our 33rd wedding anniversary. As I mentioned before, she deserves some kind of award dealing with me for 33 years. What an extraordinary wife. I'm just very, very blessed to have her in my life for sure. So family-wise, everybody's doing well. I hope you and your family are doing well also. Well, market-wise, I continue to see a lot of volatility. These China trade tensions that we're having is certainly creating some volatility. And always remember, when you get these kind of run-ups that we've had an extraordinary run-up, really since April of this year. Again, the S&P 500 is up over 30%. The NASDAQ's up even more than that since April of this year. So that's a huge run. When you get those big run-ups, we have to expect consolidation. It's actually healthy. The markets look for reasons to pull back. So when you get some trade tensions, you get some earning misses, or you get a bad report here and there, we're going to have some pullbacks. And these 5%, 2%, 3% pullbacks are very healthy. When we get the corrections, the 10% pullbacks, a little more painful, but that's part of the journey as well. Of course, the bear markets are what really hurt. That's when we go down 20% or more. And that's what we saw back in April of this year. But we recovered rather quickly. So expect that volatility when we have these kinds of run-ups. The market's going to look for reasons to sell off, and that's exactly what is happening right now. These China tensions are certainly creating some reasons to want to sell off. Not to mention the government shutdown. That's not a good thing either, and it just creates some noise. Typically, they're not long, and typically they don't affect the economy too much. But, as I record this, we're 15 days into the shutdown. Our longest that we've ever had is 35 days. Hopefully they're going to resolve these issues and we get that put behind us. I think that'll be good. We get these China tensions put behind us. I think that will be good. That coupled with the fact that the Fed is still looking to lower rates this month sometime. We're anticipating the market's priced in about a 92% chance that the Fed will reduce the Fed funds rate again in the month of October, and perhaps even again at their next meeting in December. So lowering yields is going to be good for the economy to kind of pick it up. The labor markets have been a little soft. It gives the Fed reason to lower those rates. And so hopefully we'll have that Goldilocks period that we're talking about. The economy not too hot, not too cold. Hopefully we can get some good balance. So overall, everything looks good. We've had a good year. Bond market looks solid, and we've seen rates on the 10-year Treasury come down from what was in January almost as high as 5% on the 10-year Treasury. We dropped below 4% this month. So that's a big move on the bond market. Remember, when interest rates go down, the value bonds go up. So the bond market's been pretty solid. Rates are coming down. The economy's pretty solid. The markets overall have been performing well. So from our end, everything is in good order. Expect volatility, but overall, everything's in pretty good shape here. So that's it for now. Again, client appreciation party coming up here on November 7th. It's going to be a doozy. I hope you're all there. It will be a great time. Again, my very best to you and your families. Take care and God bless.